Yo, what's up, weirdos? What's going on, guys? All right, so another day, another time, another opportunity for Bitcoin to try to press past $114,000. Currently, $113,535. It's been sitting there pretty much all morning. How the heck are you guys, man? How you feeling? How you doing? What do you say? What do you know? Let's get into it. Like I said, guys, we rejected perfectly off 114K, as you can see. And what we're waiting for now is, can we close today's daily candle above $112,000, which is this green line right here? Can we close above and stay above? Let's remove some of these lower ones here. We'll find out, guys. I still think that it's possible. We come down and we touch the 50-day moving average on the weekly time frame. Okay, let's get into it here. Let's get into the super chats. We just got one to start the stream. Yeah, boy. What's up, man? Much love to you and all us weirdos. Amen to that, brother. Amen to that. You got to be a little bit of a weirdo to be in this space at all. We got quite a bit of news to get into today, guys. Let's get through the chat. William, what's up, buddy? Beebs, my dude, over on both channels. Good to see you, brother. Good to see you. John says, super fantastic. Smash the like button. Blessings. What do we have? We got 95 people watching. We have 32 likes. Not a bad ratio, but we can get that up. We can get it to 100, guys. Quentin, what's up, buddy? H. Barbarina in the house. Marcus says, hey, Rob, I trade in Coinbase. I was wondering if I set sell orders, even if Coinbase is down, will my orders will they be filled? No. When Coinbase, what they do is they freeze everyone's ability to trade. So that would be a trade, even if it's a preset sell order, it will not fill, right? Guys, make sure you're hitting the like and subscribe on the way in. Yo-Yo Mars says, what's up, Robster? Got a little more Moonwell and Clearpool today. Nice. There you go. Those are some great pickups right there, brother. Amazing coins. Good morning, Rob Father, and all you crypto weirdos out there. Thank you so much, brother. Absolutely. Absolutely, weirdos. Maria? What's going on? Good morning, good morning. Lines Den says hit the like button or else. Benjamin, what's going on, buddy? Hope you're having a blessed Sunday. I'm in XRP short. Think she'll go down or pop to the up today. Pop to top today. XRP. I've not looked at the XRP chart in a long time, but let me have a look. XRP. She's in a bit of a falling wedge, to be honest with you. Yeah, you're in a falling wedge pattern here, descending channel, bull flag, whatever you want to call it. I think you could come up and test the top of the top trend line on this bull flag around $2.90. You could come up and test that. It looks like that's what it's going to try to do if it can pass resistance. Currently at resistance as we speak. If we can get above it, you're probably going up to that, around that $2.90, something like that. And the breakout of the bull flag, you would be looking at a move of up to, hang on, roughly $4, give or take, $4, something like that. Your boy says first and third coins, you slacking, bro. Ooh, shots fired. What do you think about EBIC network? I've never heard of it. Never heard of it. Okay, well, we're caught up in the chat, guys. Let's get into the news, I suppose. I don't think it's going to be a very long stream today at this rate. Kind of a slow, quiet Sunday. Weekly close later today is going to be kind of important. So here's how high Pump.Fund's price could go if buybacks continue at its current pace. Pump.Fund coin is living up to its name. The project just crossed a major milestone. More than $151 million worth of tokens have been bought back so far, showing serious commitment from both the team and the community. That kind of consistent buyback pressure isn't just good for headlines. It's also helping build real market confidence, and based on the latest charts, Pump price might be gearing up for another strong move. Jared says, let's have a killer weekend, fam. Absolutely. Squirt Reynolds in the house. What's up, buddy? As Crypto Patel pointed out, Pump buybacks now total over 763,000 Solana, worth roughly $151 million since launch. That's an enormous figure for a project that's still relatively young. You guys know my stance on Pump.Fund. I do think that they are revolutionizing streaming platforms. I think it's a fantastic idea, combining streaming platforms with swaps and exchanges. It's not just token burn and hype gimmick. These buybacks directly reduce circulating supply and show that the project is backing its own ecosystem in a big way. With only 9.5% of the total supply currently circulating, scarcity is starting to play a role too. Patel called the buybacks a bullish signal for holders, noting that this kind of long-term consistent activity strengthens both price stability and community trust. And right now, that trust is clearly showing up in the charts. Crypto trader Greeny shared a 12-hour chart showing Pump.Fund price finally breaking out of its long descending trend line, a structure that's been weighing on price for weeks. His position is already up 132%, with the token now trading around 2046. What's interesting is where the bounce started, which is just at the 786 level of the Fibonacci, which is 2039 in price. The trend to act as a springboard in the initial phase of reversals. From here, the next resistance of interest to watch is 20475, 205, and 2057. If the bulls succeed in breaking through the remaining over 2058 resistance, they must have meant there, the path is clear to move to 2089, short of the former high. The pump chart is now showing higher lows, increasing volume, and smaller pullbacks. All the marks you'd prefer to see in a potential trend reversal. The impressive part about Pump is the fundamentals and technicals are finally moving in sync. The consistent buybacks, steady liquidity, and growing trading volume on Solana are giving the chart real strength. Even during market dips, the token has held up better than most newer projects, mainly because the buyback program is working as intended, with more supply being pulled off the market each week. The setup naturally favors gradual price appreciation. In the short term, as long as 2039 holds as support, the setup stays bullish. A breakout and retest above 2058 would likely kick off another rally, possibly sending Pump's price towards 208, 209 in the coming weeks. If the buybacks keep running at this pace, 1 cent doesn't look unrealistic. especially with the community sentiment strengthening and trading activity rising again. With one of the most aggressive buyback models in the space and a steadily improving chart, Pump looks ready to keep pumping well. There you go, guys. Pump.fun looking to dominate the space. Absolutely. Something I do not hold in my portfolio, but I am heavily considering adding it. If you're over in the Patreon, you know that already. Squirt Reynolds says, my issue with Pump.fun is they are still way too degenerate to compete with the likes of Kick and Twitch. Yes and no. Yes and no. I think their tech needs to be upgraded still, and that's fine. Projects, as long as they continue to develop their tech and stuff and improve glitches and bugs and stuff. Here's the thing, Squirt Reynolds, that I would say about Pump.fun. As a content creator, the likes of Kick and Twitch do not reward or fairly compensate content creators for their hard work. They take all the money and they give crumbs to the person who's actually making the content, putting in the time and the work, right? However, and that goes for YouTube and X as well. It is almost impossible to get monetized as a content creator on X. It's ridiculous what they require. So in the meantime, they take the money and they don't pay the person creating the content anything at all, right? However, Pump.fun flips that script, which is incentivizing content creators to live stream over on their platform. Now, if all of the good content creators start to flock over to their platform, well, I mean, that in itself makes it competitive with the likes of X, YouTube, Kick, and Twitch, right? Because really, at the end of the day, it's going to incentivize the other streaming platforms to either compete and pay content creators fairly or lose out to projects like Pump.fun, right? So yeah. What do we got? North Korea hackers target cryptocurrency exchanges for billions in theft. This is why I keep telling you guys to use our link in the description. Get yourself a self-custody wallet, because if hackers take your crypto, what do you think your recourse is? Nothing. You have no recourse. If hackers hack you and steal your crypto, it's just gone. There's no one to complain to. No exchange is going to reimburse you. None of that stuff's going to happen, right? Your money's just gone forever. So to save yourself tens of thousands, if not hundreds of thousands of dollars in losses, spend the $50 on a self-custody wallet, right? Why would you risk tens or hundreds of thousands of dollars to save yourself $50? Think the logic through on that, right? Since the beginning of 2024, hackers groups linked to North Korea have stolen a total of $2.83 billion in cryptocurrency. According to the latest report from a multinational sanctions monitoring team, or the MSMT, $1.64 billion worth of cryptocurrency was illicitly acquired in the first 9 months of this year alone. The amount constitutes approximately 1/3 of the nation's foreign exchange income for 2024. In October of 2024, the MSMT was established by 11 countries to monitor North Korea's evasion of sanctions through crypto crimes. The group's recent reports highlight a 50% increase in cryptocurrency theft in 2025 compared to the previous year. The largest loss came from an attack targeting the Bybit exchange in February. Hackers affiliated with the Trader group infiltrated Bybit's multi-signature wallet provider, SafeWallet, and seized the cold wallet smart contract through transactions that appeared to be internal transfers. The report indicated that hackers often target third-party service providers rather than exchanges directly. Groups like Trader, Crypto Core, and Citron Sleet have deepened their attacks using fake developer profiles, identity theft, and supply chain information. The loss of $63 million from Munchable's Web3 project is cited as an example of those techniques. Although the funds were eventually returned, challenges during the laundering process were noted. According to the MSMT analysis, stolen assets are converted into cash through a 9-step process. Initially, cryptocurrencies are converted into Ethereum on decentralized exchanges, and their traces are erased using mixing services like Tornado Cash and Wasabi Wallet. Ethereum is then exchanged for Bitcoin, passed through bridging platforms, and further mixed. The Bitcoin stored in cold wallets is converted to USDT through Tron and finally transferred to over-the-counter brokers for cash. Individuals and companies based in China, Russia, and Cambodia play crucial roles in this chain. Employees in Shenskin Chain in Element Network Technology, Yen Dingrong and Tan Yongji, along with trader Wang Yikong, were identified as creators of fake identities and accounts. Russian intermediaries laundered 60 million acquired from the Bybit attack, while Cambodia's Huan Pay continued to be used in transfers despite not having its license renewed. The MSMT noted that groups linked to the Pyongyang have been collaborating with Russia-speaking. So basically, guys, like I can't keep reading these Asian names that I'm no good at reading, but the point of this is that even these centralized exchanges are getting hacked, and the crypto's getting stolen, right? And you're sitting there leaving your crypto on these exchanges like everything's going to be fine, right? If your money gets taken, guys, it's gone. Be smart here. Be smart. I am Jasmy. We're all Jasmy. Last days of October in Jasmy we trust. Jared says Zora or Pump, who comes out on top based on Solana.loop? That's a tough one. Both good projects, man. Both good projects. That is for sure. All right. What else do we have? Ramona dropping that chatter. She says, happy Sunday, weirdos. Please hit the like and subscribe here and on Crypto Blueprint. Where do we have? 139 people watching. How many likes do we have? Guys, 49 likes. Come on. We can do better. That is atrocious. Benjamin says, great article. I always told my friends, please, everybody, don't Wang Chung tonight. Yes, exactly. Lions and Zebek recovering well. Yeah, Zebek is up. What are we looking at for Zebek right now? 2.5%. Not too bad. Smash a like, says Ray Ray. Absolutely. Get it done, guys. Get it done. Ethereum ETFs face second consecutive week of outflows, while Bitcoin attracts institutional money. Squirt Reynolds says, I'm patiently waiting, but I would be lying if I said this month hasn't tested me more than, yeah, hey. That's what the market's designed to do, though, man, right? Push you to your limits. Spot Ethereum exchange-traded funds recorded their second straight week of outflows as investors' demand cooled. According to Cointelegraph, Ether products posted $243.9 million in net redemptions for the week ending Friday. This followed the previous week's $311 million in outflows based on social value data. Bitcoin's ETF showed renewed strength during the same period, recording $446 million in net inflows on Friday alone. Bitcoin products added $90.6 million. BlackRock's ETHA ETF led Ethereum's withdrawals with $100.99 million in outflows. Meanwhile, BlackRock's IBIT and Fidelity's FBTC gained $32.68 million and $57.92 million, respectively. Ramona gifting out those memberships. Make sure you give her a big thank you, guys. Our very own Crypto Mom dropping that gift in your lap today. Okay, let's keep going. Total assets under management for Ethereum-focused ETFs now stands at $26.39 billion. This represents approximately 5.55% of Ethereum's market cap. Bitcoin ETF's assets reached $149 0.96 billion, accounting for 6.78% of Bitcoin's market cap. Rotating towards Bitcoin reflects safe haven preferences. The diverging flows between Ethereum and Bitcoin ETFs reveal shifting institutional priorities. Vincent Liu, Chief Investment Officer at Kronos Research, told Cointelegraph that current flows suggest a rotation into Bitcoin. Investors are doubling down on the digital gold narrative as global uncertainty persists. Ethereum's outflows come after a period of strong inflows that began following the ETF's launch earlier this year. Blockworks reported that Ethereum's ETF momentum collapsed in September. Monthly inflows dropped from 3.9 billion in August to just 285 million in September. This represents one of the steepest reversals since the ETH ETF launched. We recently reported that Bitcoin ETFs accumulated 3.24 billion in weekly inflows as the October rally began. The surge demonstrated renewed institutional appetite for Bitcoin exposure through regulated products. The current week's 446 million inflows maintained this pattern of steady Bitcoin demand. Institutional investors appear to be waiting for a new catalyst before re-entering Ethereum's position. Liu noted that Ethereum's ongoing ETF outflows reflect cooling demand and softer on-chain activity. Bitcoin's appeal as a store of value during uncertain times continues to attract capital. The ETF inflow divergence reflects broader institutional strategy shift in digital asset allocation. Bitcoin established position as digital gold makes it a preferred choice during volatility. Traditional financial institutions increasingly view Bitcoin as a hedge against monetary debasement and economic instability. Ethereum faces different dynamics despite its strong technology platform and smart contract capabilities. The network transition of proof of stake to a layer 2 scaling solution have not yet translated into sustained ETF demand. Institutional investors require clear narratives and regulatory frameworks before committing significant capital. Rate cuts expectations from the Federal Reserve have improved sentiment towards risk assets like Bitcoin. However, Ethereum has not benefited equally from the macro tailwind. Liu expects Bitcoin's inflows to remain robust and as traders position for potential monetary easing. Ethereum and other altcoins could regain momentum only if network activity increases or new catalysts emerge. The ETF structure has fundamentally changed how institutions access cryptocurrency markets. These products provide regulated exposure without direct custody requirements. Bitcoin ETFs now generate between 5 billion and 10 billion in daily trading volume on active days. So weekdays, essentially, right? This institutional infrastructure continues to mature and attract institutional finance capital primarily into Bitcoin rather than alternative cryptocurrencies. So there's a lot more confidence in the Bitcoin ETFs currently than there is in Ethereum. What do we have? 139 people watching. We have 61 likes. Keep going, guys. Keep pushing those likes up. Let's get it up to 100 likes. We've got to break that for the algorithm. Federal Reserve considers massive money supply increase. What the heck is this? The Federal Reserve's potential decision to print trillions of dollars could significantly attract global financial markets, including cryptocurrency landscape marked by Bitcoin and Ethereum. No specific statement from leaders, but past monetary expansions often influence crypto markets due to inflation concerns, potentially elevating Bitcoin and Ethereum's value. Speculation arises that the Federal Reserve may significantly increase the money supply, affecting U.S. and global financial landscapes. This possibility highlights concerns over inflation and repercussions on cryptocurrencies like Bitcoin. The potential for the Federal Reserve to increase the money supply comes amid ongoing economic concerns. Historically, such measures have been used during crises. Prominent figures like Jerome Powell and Janet Yellen play pivotal roles in these discussions. Current speculation hint at upcoming policy shifts. Increased money supply can lead to inflationary pressures affecting investment strategies. Cryptocurrency markets may react to these developments. Financial circles anticipate potential volatility in asset values, while economists assess broader economic implications. Investors watch with interest. Past actions by central banks during the 2008 financial crisis led to varied impacts on markets such as cryptocurrencies. Analysts refer to these precedents. Experts suggest mixed outcomes could follow, potentially influencing safe haven assets like Bitcoin. So we'll see what happens, but apparently the rumors are floating around that they're going to start to increase the money supply, printing money, moving into quantitative easing. Rumble and Tether introduce Bitcoin tipping feature. I have been playing with the idea for a while now of dual streaming on Rumble, so keep an eye out for that. Rumble partners with Tether to introduce Bitcoin tipping features for creators, scheduled to launch between early to mid-December. Why YouTube and X have not done this yet, I have no idea. This initiative marks a significant move in digital asset integration, potentially increasing Bitcoin's transactions and impacting market dynamics as stablecoin usage expands in creative platforms. Rumble has collaborated with Tether to incorporate a Bitcoin tipping feature, with the release anticipated by mid-December. This collaboration aims to integrate digital currency within the platform, marking a novel venture for both entities. Key players in this initiative include Rumble, a rising video sharing platform, and Tether, a major stablecoin issuer. Tether has invested $775 million to develop Bitcoin tipping, emphasizing a strategic push into digital asset usage. Tether's leadership, Tether said, quote, "Our $775 million investment into Rumble highlights our dedication to advancing digital asset adoption within innovative solutions like Bitcoin tipping. The introduction of Bitcoin tipping can potentially impact creators and the broader crypto market. It may foster increased Bitcoin transactions as users embrace direct support for content creators like me. Hi, here's me face. Financial implications include the potential rise in Bitcoin transaction volume and market activity. Such a move highlights a growing interest in integrating cryptocurrencies into everyday. Exactly. This is just one step forward, guys. You know, you're going to be able to tip your waiter or your waitress. You're going to be able to tip anybody in crypto and Bitcoin at some point soon. So this is just one more step towards that end game. Chat's quiet today. Holy smokes. U.S. leads global Bitcoin adoption with 122 institutional holders. According to fresh data from BitcoinTreasuries.net, the United States has taken a commanding lead in institutional Bitcoin adoption, with 122 entities, including corporations, funds, and public institutions, now holding Bitcoin on their balance sheets. This figure far exceeds other major economies. Canada ranks second with 43 entities, followed by the United Kingdom, Japan, and Hong Kong. The data underscores America's growing dominance in the digital asset space, reflecting both increased institutional confidence and regulatory clarity following the approval of multiple Bitcoin ETFs earlier last year. Funny how as soon as Gary Gensler leaves, all of a sudden this happens, right? Gary Gensler must feel like such a failure right now. Unbelievable. I would follow over on Rumble ASAP. I'll make an account over on Rumble, and I'll start to dual live stream over there as well for everyone who wants to follow me there. Analysts attribute the surge in U.S.-based holdings to the convergence of two factors: ETF-driven inflows and a wave of corporate treasury diversification. Companies ranging from tech innovators to financial firms have begun accumulating Bitcoin as both a strategic reserve and inflation hedge amid ongoing macroeconomic uncertainty. Meanwhile, Canada continues to strengthen its reputation as a global crypto hub, leveraging its progressive financial regulations and early adoption of Bitcoin ETFs. The United Kingdom and Japan are also showing signs of growth, though both markets remain relatively conservative compared to North America. The report marks a turning point of Bitcoin's institutionalization. What began as a niche investment for risk tolerance, corporations are rapidly evolving into mainstream financial strategy. And the US is leading the way. Let's go with Mr. Trump at the head of the ship. Square Reynolds, I'm always a lurker, so if I don't yap much, I appreciate that, my friend. I appreciate that, Square Reynolds. You've been with me a long time, brother. That's good to know. Benjamin says, do you think your Bitcoin roll will start this evening? Liar Monday, green or red? That's a tough one, man. I don't know. I think that for the next few days, we're probably going to start to price in. Early next week, we're going to start to price in the Bitcoin or the 25 basis point rate cut, I think. So I think we'll probably see a green week, to be honest. So maybe a little bit of red on Monday, followed by the rest of the week being green, potentially. Yeah. Oh, let's keep it going. Bitcoin repositioned as liquidity barometer, not inflation hedge. Greg Sipple, let's call him Greg, from NYDIG challenges the belief that Bitcoin is an inflation hedge, highlighting on October 26th, its role as a liquidity barometer instead. Ohouse says no likes equals no bull run. This shift impacts Bitcoin's market perception and emphasizes its significance in global liquidity assessment rather than traditional inflation-based value arguments. Greg from the NYDG disputes the claim that Bitcoin serves as an inflation hedge. Instead, its inverse relationship with real interest rates has caused it to evolve into a global liquidity indicator. His analysis points out the changing market dynamics influencing Bitcoin pricing. This shift suggests different influences may guide the cryptocurrency's valuation. The immediate implication is a potential reevaluation by investors and institutions regarding Bitcoin's utility and market behavior. Market figures and participants have shown increased interest in his insights, concentrating on how they might reshape investment narratives surrounding major cryptocurrencies like Bitcoin. It remains crucial for industry observers and investors to reassess Bitcoin's role given these insights. Very, very interesting take. Very, very interesting take. Rise Above, what's up, man? Good to see you, my guy. Good to see you. Here's one for you guys. This is going to make you hungry. It's going to make you hungry. Bitcoin versus the Whopper. How America's burger inflation exposes a broken economy. Benjamin, I appreciate you, brother. Thank you for the super sticker, my friend. All right, the Whopper. According to a viral post by Adam Livingston, the true state of the U.S. economy isn't revealed by official data like CPI or the Federal Reserve reports. It's exposed by the price of a Burger King Whopper. You heard that right. In 2015, a Whopper cost $3.75, or about $1.19 million Satoshis. Today, that same burger is priced at $8.29, while its Bitcoin valuation has dropped to just 7,420 Satoshis. Wow. So it was 1.19 million Satoshis. Now it's only 7,420 Satoshis. Livingston calls this the ultimate proof of the US dollar collapse, arguing that Bitcoin's purchasing power has soared while fiat continues to erode. The Whopper didn't get bigger. he's not wrong. The only thing that changed is the dollar evaporated faster than the middle class. He described the Whopper's index as a more honest measure of inflation, a symbol of how everyday Americans are paying the price for decades of monetary mismanagement and money printing. The Post portrays inflation not as an accident, but as a default operating system of the modern economy, where wages stagnate while prices climb and savings lose value. Livingston framed Bitcoin as the escape hatch. Your emancipated proclamation, he claims, offering individuals a way to opt out of the system built on debt, dilution, and dependency. His conclusion is blunt and symbolic. One day, when the Whopper is $50 and still only costs a handful of Satoshis, you'll realize the burger didn't change. You just stopped being the clown in someone else's drive-thru. This is the best. This article wins the internet today. I'm sorry. It wins the internet today. That's absolutely amazing. Super fantastic. All right, let's go back and look at the Bitcoin chart. Bitcoin versus the Whopper. Hugo says, I like the Patreon. It learns me stuff. You should know stuff too. Join now. Exactly. Beebs, also, a potential trade agreement between the U.S. and China could be in the cards this week. Yes, absolutely. Throw rate cuts in the mix. You could see a big move. I agree, Beebs. We could see some very, very bullish stuff. Combined with the fact as well, I'll raise you one better and say, if Powell is dovish going into November and December about more rate cuts this year, you could see even further price action to the upside. All right, guys, I got some coaching calls I got to get to over on the Patreon. Get over there, book your coaching calls today. But before I go, I want to show you something that's going to got the fries to cross your eyes, my friends. Check this out, okay? Listen, if you're new to crypto, check out our website. We have a free newsletter over there. You get our free insights as well about what we covered this week. Avantis, Zebek, and Asteer. Again, you can check out our free newsletter as well, guys. The latest and greatest and the future thoughts looking ahead and so much more. The link to our private community is there over in the Patreon where you can book your one-on-one coaching calls and stuff. You can track my journey to Japan. You can also catch the latest episodes of Blockchain Buzz, one of our shows, where we have the greatest minds in crypto YouTube all in one place to evaluate to have an unfiltered roundtable about what's happening in the crypto space. So you can catch those episodes here as well, followed by our unique live special private community live streams. We have those and then we post them here later. So you can check all that out and more, guys, and you can get testimonials. So check it out. The link is in the chat. It's in the description, guys. It's absolutely free to go over to our website. Our newsletter is free. And again, if you join our private community, we drop daily trades, morning market overview videos, exclusive Patreon-only content, and so much more, guys. Book your one-on-one coaching calls. I'll see you guys over there. Click like if you like this video. Click subscribe if you really liked it. I'll see you guys in the next one. God bless.